Welcome back to the channel Trading Simplified. I'm a trading enthusiast and love to simplify trading. To get started, just a reminder that I'm not a financial advisor and this video is for entertainment purposes only. What's up, everybody? So I just wanted to bring up stocks that I'm looking at. I just made a previous video on PLTR showing the new highs and how it's going to have a potential chance to make a run to 35. Just showing it really quick on the 3-month chart. I'm sorry, the 6-month chart. You can see that, zooming out, the next resistance level is around here, up at $36. So now that PLTR just broke this previous 27, and now the previous 27 here, it's at 28.9 after hours, we could see it run now. The next stock that I really want to focus on is NIO. NIO is a stock that is an electric vehicle company that went up to $60 in 1 year from $5, as you can see, from $5 all the way down here. Actually, I might have to bring it up just another year. Let's see here. Here we go. So it used to trade around $1 to $2 a share, and within the last 2 years, it has just risen all the way up. Which I just want to draw a quick trend line for a massive 1,300% gain up to 65, and has since sold down. And now it is down to $37 a share, and it's really been hovering around here, and it's making newer lows. But the thing I wanted to point out here is zooming in. Let me get a better view on this. When we go on the 1-month chart, you can see that PLTR, this chart looks terrible. Hold on, let me fix this for you. You can see here that it hit a high up here of $41, and now it's coming back down to 37. But the most important thing to realize is a few months ago, when everything sold off, NIO had a nice support level in the $31 range. Now that's where it sold off drastically, but right here is where it bounced back up at $31 to $32. NIO, I'm patiently waiting. Do I believe it could go back up? It could go back up, of course. But the thing is, with the semiconductor shortages and everything that's going on with China, with deregulation, and they're also saying that China's saying that there's too many EV companies out there, it's something to be aware of. But the reason I like the 31 to 33 range as an entry target is I believe we're going to get a bounce, because looking at the RSI down here, remember down here is oversold, over here is overbought. We're right around here right now, and we are looking at pretty much the 6-month chart at 38, 37 right now on the RSI. But I want to see it come down another, let's see, if it goes down to at least 32.50, that's another 15% drop. We want a 15% drop right here, and then be looking for our entry on NIO around $33 to do a swing trade. The next stock I want to bring up is JetBlue. JetBlue is one of my faves. I love trading JetBlue. The thing is, this stock gets beat up, but about this stock, it has just shown support levels in the $14 range. So anywhere from $14 to $14.50 has been a consistent buy for an easy day trade for 50-cent gains, which is huge. So you can see this is we're going to look at the 3-month chart. And looking at the 3-month chart, you can see here the main support level right here. Let me just bring it up with a horizontal line real quick. You can see here the main support level is $14. This is where it has been support. And now it has potential to actually ride back up, but we'll see. We're not going to be buying up here when we know it's consistently been hitting this 14 and bouncing. So it's been getting tested here. And with everything that's going on with COVID, we're not really sure, So we'll see if it's going to keep going up or down. So it really doesn't have a clear trajectory. It's just consolidation in this area. So it's not something that you want to buy up in the 15s and hope it just goes up and finally breaks this 15.5 to 15.75 range. So I'm going to be looking for an entry on it again around anything that is below $14.50, because I know that there's support here at 14, and then I can follow my stop loss if it breaks further down. The next stock I want to bring up is Zoom. I truly believe this is oversold to the max. This is a stock that was brought through COVID. Really, honestly, this is the definition of going to the moon. If you look at Zoom, it trended from $67 a share, then COVID hit and went up to $588. I mean, there was a percentage gain on it. I just want to see what it is because that's just ridiculous. If anybody held on to that, it's amazing. It's a almost 800% gain on it. But overall, since it's been at that high of 588, it has sold off from 588 all the way down to 278 now. That's a 52% loss. Now, I just think this is a beautiful entry on Zoom. You get a 50% off. The reason that they're saying, in the news at least, they're saying it's selling off is because of, COVID-19, they think is clearing up with the vaccines and it's going away. Personally, I just like Zoom. I like their earnings. They make billions of dollars every single earnings. They've crushed earnings every single time. And the only reason it's sold off is because they were saying their guidance was off. So guidance meaning that their future projected earnings, they're thinking is going to slow down. But Zoom is getting into other spaces. They bought, different companies, or they're merging. So I think it's a good potential, something you should think about buying. If you're still hesitant on them, just realize your support level is right here, which would be 250. So 250 would be a good entry on Zoom. Next stock I like to bring up, where is it? DM. DM had the highs of 34%, and I like oversold companies. I mean, who doesn't want an oversold company that made these monster gains and then just sold off and you can get them at dirt cheap? And we'll talk about one more stock after this because I think it's worth mentioning. But DM went from $35 down to $7. Now, to me, this is a clear buy. Anything that's under, it's down almost 80%. 80% from its highs. I mean, $35 to $7.80. I mean, it's almost a no-brainer. I feel like you can even just buy, whatever, 100 shares, 200 shares, whatever you're comfortable with, whatever your portfolio is. Limit your risk, 2 to 3% of the portfolio. Just sit on it and see where it goes. I personally think this is the support level. This is where the institutions are buying. And the reason I say that is, let me just bring up a better chart here so we can see. If you look on the 1 month, just to get a little better perspective here, we'll just do a week. I will just do 5 days on it. If you look at the 5-day chart, the support level is clearly here. And the reason I'm saying this is look at the volume. Look at these green bars right here. I mean, trying to see if it's, oh, so good. So right over here is where I can see the volume. And it's showing you that normal volume over here is around like 23,000, 25,000, and that's shares. That's like trades, right? But when you get to this portion, when it went down to $7.40, this is the low from $35. Look at your volume. You were at 40,000 shares. Now you're up to 300,000, 500,000, 400,000. These are institutions buying at these levels. I mean, me and you cannot buy this many shares unless we already made it and made the millions. But I truly believe anywhere 7.5, 7.6 is a good entry point where you can get your starting position. You're getting it 80% off. I like discounts. I like companies that I could see potentially growing in the future. I think DM is a buy right now. I mean, I just look at that. I mean, 80% off right now. I mean, I don't know. To me, it's just a no-brainer. Next one, moving forward, AMC. AMC, this is not a company that you want to buy and hold, like meaning that you're going to buy on fundamentals. This is strictly day trading. AMC is a stock that blew up from $2 to $5. I mean, it used to be like $2 all the way up to $72. I mean, that's a ridiculous gain. I mean, you went from $2 to $70, that's a 3,200% gain. I mean, that's amazing. We dream of those gains. I made some money off of AMC, but no, I did not hold it for that long. I mean, that would have been amazing. But now looking at it, the reason I'm interested is because it is forming this support level here at a low of $30. At $30, I feel like that's a beautiful entry. I mean, it's at 46 right now. We have to see where it's going to go. But when I look at the overall chart, let me see if I can switch this because that's much better. When I look at the overall chart, it is building support. It has the next support level is going to be right here in this range at $38 to $39. So the next time AMC goes down below $40, just touches below $40, I'm going to be entering this position. Now, I'm not going to go crazy, But it's just good to get some shares in there because AMC, I just want to bring up, when you day trade this stock, it has massive swings. So you could either get smoked where it goes from $48 a share in one day down to 46. I mean, if you're day trading that and you take a 2-point loss, that's going to be a lot of money you're losing. But it also has these massive swings back up. So I just want to give an example. So the other day I was watching it, I was at work, and I was looking at it, and it sold off from $53 down to $43. And then look at this percentage gain that you would get in a matter of hours pretty much, which is incredible. Hold on, I'm trying to bring up the chart to draw. So $44 all the way up, even to here, is a nice 7.7% gain in the same day. That's $44 a share up to 48 almost. And now, even if you just were able to hold it, you got it back up to $48 for a 10% gain. So AMC is something that you could take 10% losses on, but you could also make 5 to 10% in one swing. I personally am looking for an entry at AMC, not at $43. I don't want to see it retest this. I think it's going to. But I think we need to be patient, and we need to look for the $41 range. And I'm just going to bring it up one more time so you can see it, just to get an idea of what I'm looking at. And this would be the entry right here. This is the support. And the reason is right here. This is your support level right here that I'm highlighting at the $40 to 41. And it is reasonable for AMC to sell off, 5 points in one day. It's gone up 5, 10 points in one day. I don't like to hold this stock overnight. I like to see how it's doing during market hours and then make my decision from there. And then the last stock I wanted to bring up is Apple. Apple is the best stock of all time, in my opinion. You literally can buy this and just hold it forever. Personally, do I do that? No. I mean, I have shares, of course, but I like to buy Apple when it truly dies. And right now, it was just making new highs, and it just seems unpredictable at everything that's going on in the market. It seems as if everybody thinks the market's going to crash just because it's making new highs. I mean, the market's always making new highs, and you always just have to have some skin in the game, whether that's in an S&P 500 index fund. But looking at the 5-year trajectory of Apple, I mean, it did split, so it was never really $30. It was hundreds or thousands of dollars a share. But I mean, look at the growth. I mean, the growth from $26 just 5 years ago. I mean, you could have just invested only in Apple, to be honest, and you probably would have been better than most of the traders out there. I mean, that was a 400% gain. But I just want to the only reason I'm bringing them up is because I just want to bring up the thing I think that is important about Apple is which way is it going to go at this point? Because now it's consolidating, and this is the support level we spoke about the other day at around the 144 to 145, and I'm not looking to make an entry at this point. I just want to see if it's going to break this level. I don't like to buy Apple at these prices. I think it's too expensive. Do I think it's worth it? If I was holding it for long term, yes. But right now, since I am not, that's not the kind of game I'm trying to play. Just remember, 1 year ago, it was $112 a share. When Apple finally comes down in the 120 to 130 range, then I'm going to start building a position. So anywhere from 120 to 130, we are looking for a position. But at these current highs, I'm going to sit it out, I'm going to watch it, and just see what happens. That's all I got for you guys today. I just wanted to review it. We think PLTR could potentially break up to new highs going up to 35. We think DM right now, 80% discount from $35 down to $7. I think it's worth holding some shares, see where it goes. NIO, I love this stock. This stock gives good swings too as a day trader. Sometimes you got to buy the death. You buy the red and then you give it a few days and it comes back up. But you just have to be careful with all the shortages going on. The chip shortage, you have to think about China's what they're doing with the deregulation and saying there's too many electric vehicles. That could be to shake people out. I mean, it was high as 67, but now it's come back down 50% discount. JetBlue right now, we like in that $14 to $14.50 range. And the beloved AMC, which is the meme stock, which, I mean, I think it's a good money. I think you can make good money on this stock. You just have to be very careful and follow a stop loss. And you got to ride the momentum when it's there, because when the momentum's there, you can get serious gains real quick. And Zoom, I just believe this is completely oversold. I could be wrong. What do I know, right? But this is just, me thinking out loud. But I like Zoom at the 250 support range. I think 250 to 270 in between there is where you got to start building a position in Zoom and think long term for them. Don't think, a month from now. Just swing trade it, build the shares. Know, it was almost $600 a share and now it's down to 280. And one other thing that I was thinking about is Tesla. Tesla's a great example of this. Tesla was selling off, I think it was a month ago. Let's just go back to the 1 month chart real quick. So 1 month ago, I'll make it 3 months, but it was in between that time. It was really selling off. Like, they were talking about how this company was not doing well. And pretty much talking like how they should, they're going to break new lows. They were at as low as here, 620. And then look, if you buy the dip and you just be patient with it, I mean, you're getting it from it was under 600 at one point. There it is. It was down here, 580. It hit this is the part, I'm sorry, it hit here, 550. 550 was the 200 SMA, which is the 200 simple moving average. You buy these big pullbacks that these companies get, 753 down to 550, and then it rises all the way up. So you just, sometimes buying the death is what you got to do. Everybody's afraid, and you buy and you hold, and then you wait for the gains. You obviously don't do too much money so you can sleep at night, but I think a similar thing is happening to Zoom right now. I mean, you zoom out, you look at this company. I mean, this is the support level right here, 271. This is where you would have that balance. You would have that support. So it's probably going to retest it. It's going to test it. It's going to come down to 270s, but we'll see what happens. I think 260 is a definite buy on Zoom. That's all I got for you guys. I just wanted to bring up what I was thinking, the trades that I'm thinking about making. These are the stocks that I'll be watching over tomorrow and the next week, obviously. PLTR is number one always because, I mean, you got the bullishness on your side. Anytime a stock is making new highs, you got to watch it and you got to see where it's going to go. But that's where I'm looking at so far. All right, thanks for tuning in.